Sales are up, construction is falling. That tension is reshaping the market in Massachusetts, street by street and month by month. The shape of the year is written in hard numbers. In September 2022, statewide closed sales increased for both sides of the market. Single-family transactions rose between about 4.8% and 8%, while condo closings climbed 6.4%. That movement came with higher price tags. The median single-family sale price in September landed somewhere between $625,000 and $654,500, depending on the measure, and condos posted a median of $525,000. New supply did step in. New single-family listings rose 7.5% year-over-year in September, and new condo listings jumped 13.3%. But the underlying shortage did not vanish. Single-family inventory still fell 4.2% compared to September 2024, even as condo inventory ticked up 5.1%. Then came October. The lead indicator, closed single-family sales, did more than hold. It accelerated. Massachusetts recorded 3,921 single-family closings in October, a 5.6% year-over-year jump. The median single-family price pushed higher to $660,000, up 2.3% from last October. Condos told a more cautious story. Closed sales edged down 1.1% in October, even as the median condo price rose 2.8% to $549,900. Those figures summarize a market that is moving but not loosening. Dig down and the rhythm changes town by town. In Braintree in September, 25 homes changed hands. The median sale price there reached $755,900, a 6% increase that local buyers felt immediately. Across the first 9 months of 25 in Braintree, the average home cost $725,000, nearly 4% higher than the same period in 24. Statewide during September, 3,769 single-family homes sold, an 8% increase from a year earlier. Through the first 9 months of the year, Massachusetts logged 31,980 single-family transactions, 3% more than in 2024. On that same year-to-date basis, the statewide median for single-family homes rose 3% to $640,000. This is not simply a story of demand. It's a story of a pipeline. Greater Boston's rental vacancy rate, what percentage of the rental stock sits empty, was just 3% in 2024, the lowest of any major metropolitan area. Rents here rank near the very top nationally, and estimates for a typical monthly rent span from about $2,400 on the low end to roughly $3,500 on the high end. That price pressure bleeds into ownership. When the cost of renting is high and choice is narrow, households lean harder into the for-sale market, even as mortgage costs move around. Recently, a mortgage rate cut added a bit of oxygen, helping turn the market more thoughtful, with buyers and sellers resetting pace as the year turned toward its final quarter. But rates also jumped last week after a signal that a December rate cut may not happen. The immediate effect: expectations are volatile, and every prospective bidder is doing the math twice. Now look at construction. The hammering that began after the pandemic, when permits surged in 2021 and 2022, is quieting. In the city of Boston, the years 2023 and 2024 were the two lowest for new housing permits since 2012. Across the region, through July of this year, municipalities permitted only 5,456 new homes. That is a 44% drop from the same period in 21. The difference is not a rounding error. It is the difference between projects finishing and projects not starting. The goal remains large: 222,000 new units by 2035. But the feedstock matters. If the pipeline dries up, the finishing tape will recede with it. Prices reflect that reality across the map. In communities where median home values were once accessible, growth since 2015 has been stark. In Brockton, the median sale price of a single-family home is up 72% since 2015. In Lawrence, it has more than doubled. On the high end, the crowd of million-dollar markets has thickened. In 36 cities and towns, the median price for a single-family home now exceeds $1,000. In 3 of them, Brookline, Wellesley, and Weston, the median breaks the $2,000 threshold. A look at recent price leaders shows the breadth of the climb. Over the 12 months ending September 2022-5, Norwell posted the biggest dollar gain in the state's typical home value, rising by $53,660 to $1,207,653, up 5.5%. Egremont followed, with a $51,686 gain to $805,000, a 6.9% increase. Weston added $48,044, pushing the typical home to $2,200 and $220,602, a 2.2% move atop a very high base. In Wenham, an additional $46,683 brought the typical home to $1,040,132, up 4.7%. Manchester climbed $46,657 to $1,289,884, a 3.8% increase. Wellesley rose by $42,260, landing at $1,969,343, up 2.2% over the year. Lincoln added $36,647 to reach $1,518,768, up 2.5%, and Dover gained $35,329 to $1,746,599, up 2.1%. Newton's typical home sat just a dollar under $1,500,000 after a $34,506 annual gain, a 2.4% increase, while Concord's typical home rose $34,801 to $1,439, $327, up 2.5%. Even mid-market and entry markets moved briskly. Adams saw an $20,736 gain to $263,580, an 8.5% jump, and East Hampton added $18,765 to reach $422,000, up 4.6%. In Methuen, the typical value rose by $20,348 to $609,720, a 3.5% increase, while Longmeadow's typical home climbed $20,563 to $522,062, up 4.1%. Coastal and commuter towns likewise ticked up. Gloucester added $30,224 to reach $759,274, up 4.1%. Scituate climbed $20,586 to $976, $398, a 2.2% rise. Marshfield gained $19,792 to $1,774, $194, a 2.6% increase. Pembroke added $17,750 to $648,314, up 2.8%. Andover rose by $27, $976 to $987, $274, up 2.4%, while Boxford added $33,000, $767 to $1,047, up 3.3%. West Bridgewater rose $19,315 to $585, $266, up 3.4%. Methuen, Danvers, and Ashland recorded annual gains between roughly $18,000 and $20,000, with typical values of $609,000, $720 in Methuen, $720 in Thousand, $646 in Danvers, and $667,142 in Ashland. In the Worcester orbit, Berlin added $21,575 to $655,085, up 3.4%, and Grafton climbed $17,485 to $600,841, up 3.0%. In the Berkshires, Stockbridge gained $26,652 to $738,102, up 3.7%. West Stockbridge rose $20,200 $213, $260,000, $106, up 3.1%. Monterey added $28,985 to $729,616, up 4.1%, and Tyringham's typical value increased by $25, $923 to $694, a 3.3% move. Those gains sit atop 5-year surges that are hard to ignore. Norwell is up $368,108 over 5 years, a 55.8% jump. Weston is up $832,165 in that span, 59.9% higher. Wellesley's 5-year increase totals $640,686, up 48.2%. Gloucester's typical home is up $263,332 over 5 years, a 53.1% rise. Adams is up $105,680 over 5 years, a 60-6.9% jump. The pattern repeats from the Route 3 corridor to the Route 128 loop and out to the hill towns. Constrained supply and steady demand push values higher across budgets and zip codes. Underneath those numbers lies the human math of affordability. In 2021, a home in the lower third of Greater Boston's market cost $399,554. To avoid being cost-burdened, spending more than 30% of income on housing, a household needed to earn about $90,000 to $8,000 per year. By 2025, that same lower-tier home cost $505,319. The required income to carry it rose to $162,224. That single shift priced out a large cohort that could afford the bottom third just 4 years earlier. On the rental side, nearly half of all renters in Greater Boston are cost-burdened. 26% are severely cost-burdened. The weight is not evenly distributed. 56% of Black renter households are cost-burdened, along with 52% of Latino renter households. At the sharpest edge, homelessness surged in 2023 and peaked in 24 at the highest levels in recent memory. There has been a slight dip in 2025, but the total remains elevated compared with pre-2023 conditions. In January 2024, the homelessness rate for Black residents stood at 366 per 10,000. For Latino residents, it was 105 per 10,000. For white residents, 21 per 10,000. Those ratios compress the forces we've tallied, rising costs, tight vacancies, and uneven incomes into a single, stark measure. Even with this pressure, the for-sale market is not at a boil. It's more deliberate. Balanced pricing, the Goldilocks approach, has been the winning play for many sellers this fall. In September, statewide condo sales climbed 6.4%, and single-family closings rose between around 4.8% and 8%. Yet single-family inventory still contracted by 4.2% across the state, which means that pricing too far above the market remains risky. Sellers who meet the market are seeing traction. That aligns with the October print, 3,921 single-family closings, a 5.6% year-over-year increase, with a median sale price of $660,000. Condos, by contrast, saw a 1.1% dip in closed sales in October, even as the median price rose to $549,000. Buyers are active but selective. They are bidding where the value lands in the pocket of this year's financing costs and long-term scarcity. Financing is the variable that can shift weekly. A recent mortgage rate cut helped open the door to more showings and more offers. The expectation that further cuts might follow supported a more thoughtful pace, less frantic than the pandemic-era chase, but still competitive in well-priced segments. Then last week, rates jumped after a signal that a December rate cut may not happen. That whiplash shows up in weekend traffic, in the size of price reductions, and in how long buyers wait before writing an offer. It also tests the patience of sellers who listed in September when new single-family listings rose 7.5% and new condo listings rose 13.3%. Many of those sellers are still in market today, adjusting to the October split, single-family strengthening, condos cooling, and the crosswinds of financing. The supply side is the long game, and the scoreboard is public. Through July of 2025, the region permitted 5,456 new homes, 44% fewer than the same stretch in 21-20. In Boston itself, 2023 and 2024 marked the two lowest years for new housing permits since 2012. The earlier spike of permits in 2020-1 and 2022 is being delivered now. Projects greenlit then have opened or will soon. But behind them, the pipeline is sparse. When the December lights go up, so do the questions. What breaks ground next spring? What fills the gap in 26-7? With a target of 222,000 new units by 2035, the current pace is a warning light, not merely a data point. Policy is the lever within reach. The MBTA Communities Act, a statewide law, requires the 177 cities and towns with access to the T to make room for more multifamily housing. The response has been uneven. In some communities, zoning plans were drawn to comply, while realistically yielding very few homes. In others, debates have been bruising, but have resulted in meaningful upzoning near train stations and key bus corridors. The law's core premise is clear: align transit and density, and the market will do the rest. But the path to that outcome runs through public meetings, town planning boards, and votes that can stretch across multiple seasons. The call is to build broad coalitions and, crucially, to pair zoning with infrastructure funding, money for schools, roads, and utilities, to support growth. That is how paper plans become buildings. Meanwhile, buyers live in the market they have, not the one that might arrive in a few years. In September, the statewide median single-family sale price sat between $625,000 and $654,000, depending on the yardstick. In October, it was $660,000. Those are not numbers for the wealthy alone. They define the middle. In Braintree, the September median of $755,900 across 25 sales tells the story of a typical Boston suburb: strong schools, commuter access, and nearly a 6% year-over-year jump. In Newton, the typical home value approached $1,500,000, rising by $34,000, $506 over the past year. In Lexington, the typical home stood at $1,561,212, up $26,790. In Needham, the typical home reached $1,513,544 after a $22,323 annual gain. In Concord, $1,437 followed a $34,801 increase. In Wellesley, $1,969,343 sits within sight of the $2,000 mark after a $42,206 annual move. And in Weston, $2,220,602 after a $48,044 climb captures the gravity at the top. The coast illustrates the same arc. Situate at $976,398, up $20,586 on the year. Marshfield at $774,194,000, up $19,792. Duxbury at $1,078,765, up $24,087. Manchester at $1,289,884, up $46,657. Gloucester at $759,274, up $30,224. Each of those towns also shows 5-year gains between about 50 and 60%, adding hundreds of thousands of dollars to typical values since the late 2010s. Inland, the Worcester area posted measured but steady climbs. Sutton at $627,201 after a $17,573 annual gain. Grafton at $600,841, up $17,485, and Berlin at $655,087, up $21,575. In the Springfield area, East Hampton at $422,674 rose $18,765 in a year, and Longmeadow at $522,062 climbed $20,563. North of Boston, the North Shore tells a similar tale. Danvers rose to $721,646, up $17,993. Topsfield reached $961,242, up $19,580. Hamilton moved to $878,754, up $22,767. Rowley hit $787,048, up $18,492. Wenham's 1042 IPF.693 after a $46,683 increase shows how small towns with historic centers and commuter access join the $1 million club. Boxford's $1,047 after a $33,762 gain, and Andover's $980,274 after a $22,960 increase extend that pattern inland along the Route 495 belt. The Berkshires, often seen as a different market, are not insulated. Stockbridge at $738, $102, up $26,652 in a year, and West Stockbridge at $670,106, up $20,213, sit alongside Monterey at $729,616 after a $28,000 gain. Egremont's $805,000 after a $51,686 annual jump leads the region and ranks second statewide for dollar gains. Those towns also show 5-year gains between about 50 and 73%, a reminder that second home demand and pandemic-era reshuffling widened the map of competition. On paper, these numbers add up to strength. On the ground, they add up to trade-offs. A household looking at a $640,000 median across the first 9 months of 2025 statewide needs to balance monthly payments against rising rents that can run from around $2,400 to closer to $3,500 in Boston. A household earning $92,000 could afford the lower third of the market in 2021, when that segment averaged $399,554. By 2022, the same segment averaged $505,319 and required $162,224 of income to avoid being cost-burdened. That delta pushes buyers to consider smaller homes, further commutes, or multi-generational arrangements. It also nudges some to remain in the rental market, which remains one of the tightest in the country, at a 3% vacancy rate. In that context, September's new listings, up 7.5% for single-family homes and 13.3% for condos, were a welcome release valve, even if just a small one. Momentum is a mosaic, not a straight line. In September, single-family sales increased statewide by somewhere between roughly 5 and 8%, and condos rose 6.4%. In October, single-family closings climbed to 3,910 to 1, up 5.6% year-over-year, while condo closings edged down 1.1%. Braintree's 25 sales at a $75,900 median highlight a local market moving faster than the state median, while towns as varied as Adams and Lexington show that both ends of the price spectrum are seeing annual gains. 8.5% in Adams, 1.7% in Lexington, driven by scarcity and location premiums. The variation underscores a common truth. Where new supply is scarce, prices grind higher, even in a slower macro environment. The construction cliff looms over all of it. The post-pandemic wave of permits in 2021 and 2022 created a burst of building that is landing now. But the next wave is small. With only 5,456 homes permitted across the region through July of 2055, 44% fewer than the comparable months in 2021, the math points to fewer completions in the coming years. In Boston, 2 straight years, 2023 and 2024, set decade-plus lows for new housing permits, the weakest since 2012. That trend, if it continues, will tighten markets not just in the city, but in the towns that ring it, as would-be buyers and renters widen their search radii. Policy can reshape that pipeline. The MBTA Communities Act requires 177 communities to zone for multifamily housing near transit. But zoning is the start, not the finish. In some places, plans were drafted to comply, but would generate few real units. Elsewhere, substantive upzoning near stations offers a path to thousands of homes if projects follow. Supporters argue that coupling zoning with state-funded infrastructure upgrades for schools strained by enrollment, for roads and sewers stretched by density, can convert plans into building permits. That, in turn, could raise the 5,456 permit pace logged through July and refill the construction queue that has thinned since 2020. Until then, the market will trade within today's boundaries. Sellers who meet the numbers, in September, a statewide single-family median between $625,000 and $654,500, in October, $660,000, are seeing activity. Buyers with financing dialed in are still winning bids in towns where the typical home value rose by $20,000 to $50,000 over the last year, from Gloucester's $30,224 gain to Norwell's $53,660 jump. In high-end enclaves like Weston and Wellesley, annual gains of $48,000, $44, and $42,206 on $2,000, $220,000, $602,000, $1,000, $969,000, $343 bases illustrate the durable appeal of top-ranked school districts and established neighborhoods. In entry markets like Adams and East Hampton, 8 to 5% annual gains illustrate that relief is not readily found by simply moving west. That does not mean buyers are powerless. The Goldilocks strategy, pricing homes to the market rather than listing aspirationally, has kept transactions flowing. In September, condo closings rose 6.4%, and single-family closings rose between about 5 and 8% statewide. In October, single-family closings continued higher at 3,921, up 5.6%, even as condo closings dipped by 1.1%. Those shifts reward readiness, pre-approval done, inspection strategy clear, and price discipline aligned with neighborhood comps. On the sell side, the willingness to adjust to feedback within the first 2 weeks can be the difference between accepting an offer in October and seeing the listing roll into December. Against that tactical backdrop sits a longer social ledger. Nearly half of renters in Greater Boston are cost-burdened, and 26% are severely so. That burden falls disproportionately on Black and Latino households. 56% and 52%, respectively, carry cost burdens. Homelessness, although down slightly in 2025 from a 2024 peak, remains elevated. In January 2024, the rate per 10,000 residents stood at 366 for Black residents, 105 for Latino residents, and 21 for white residents. Those are not abstract numbers. They are a measure of how urgently supply must meet need. So what comes next? Signals suggest a base case of continued tightness through winter and into spring, with steady but not spectacular sales and prices that edge higher where supply is scarcest. The September to October sequence, single-family closings up between about 5 and 8% in September and 5.6% in October, with median stepping from roughly $640,000 year-to-date to $660,000 in October, sets the tone. The outliers will be towns where new listings briefly outrun pent-up demand or where financing costs jolt buyers onto the sidelines for a few weeks. 2 watch items stand out. First, permits. Monitor whether year-end 2026 FIRST permitting pulls up from the trough that left the region with 5,456 new homes permitted through July, 44% below the same months of 2021. In Boston, watch whether permit volumes in the coming months break the pattern that made 2230 and 22.4 the lowest years since 2012. If those numbers move up, the construction cliff flattens. If they don't, the pipeline remains thin into 2027. Second, financing. A recent cut opened the door to more listings and closings in September. New single-family listings up 7.5%, new condo listings up 13.3%, and a sense that additional cuts might follow encouraged a more orderly market. The jump in rates last week, after a signal that a December cut may not happen, is a reminder that borrowing costs can change momentum in a heartbeat. Watch how quickly lenders reprice and how that filters into January and February offer activity. Threaded through both is the MBTA Communities Framework, zoning that truly enables multifamily near transit, paired with commitments for the infrastructure that makes growth workable, can lift permits from the 5,000 range and channel demand into new supply. Without that, the state's goal of 222,000 new units by 2035 remains a distant target, and the market continues to balance rising prices on a narrowing base of affordability. For now, the facts are clear. September brought more closings, up between roughly 5 and 8% for single-family and 6.4% for condos, and a median single-family price between $625,000 and $654,500. October brought 3,921 single-family closings, up 5.6%, and a $660,000 median, while condos saw a 1.1% decline in closings and a $549,900 median. Through the first 9 months, 31,980 single-family homes sold statewide, 3% more than the same stretch in 2024 at a $640,000 median, 3% higher. In Braintree, 25 September sales at a $755,900 median marked a 6% jump. In Brookline, single-family prices rose 72% since 2015. In Lawrence, they more than doubled. 36 communities now sit above a $1,000 median. Brookline, Wellesley, and Weston exceed $2,200. Across the Boston region, a 3% rental vacancy rate in 24 OI holds rents near the top of U.S. markets with typical monthly costs in the $2,400 to $3,000 range. Through July, only 5,456 new homes were permitted region-wide, down 44% from the same period in 2021, and in the city, the past 2 years set the lowest permitting mark since 2012. The bottom third of the ownership market climbed from $399,554 in 2021 to $505,000 and $5,319 in 25, with the income needed to carry it rising from $90,000 to $8,000 to $162,224. Nearly half of renters are cost-burdened, 26% severely so. In January 2024, homelessness rates per 10,000 were 366 for Black residents, 105 for Latino residents, and 21 for white residents. And 177 communities are now bound by a law to zone for multifamily near transit, a tool that can widen the path from plan to permit to home. Sales are up. Construction is falling. Between those lines lies the future of housing in Massachusetts. If the permitting rebound, financing stability, and transit-oriented zoning all move in the same direction over the next year, the market can bend toward balance. If not, the math we've laid out, $660,000 medians, $1,000 plus towns, and 5-figure annual gains won't budge much. If this walkthrough helped you see where the numbers point, stay with us for the next deep dive.